For more on the subject, I spoke to Nahashon Mungai, Executive Director of SIB Global Markets. Take a listen.
Online platforms became more common in usage about 10 years ago due to the advent of the internet and higher speeds of the internet. The best way that they have actually helped investors to gain access is by reducing the barriers to entry. So now investors with as little as $100, $50 can actually invest in these markets.
So a lot of people are very hesitant when it comes to working with fund managers because of fraudulent activities. How can we prevent this from happening?
Number one, the most important thing they need to ensure is they're working with an entity that's regulated by a regulator from whatever country they're investing in. This is very critical because the investor has some sort of recourse in case of any trouble with their investments. The second thing that they need to look out for is excessive promises about returns, especially amateur shops that will promise very high returns especially high returns that are also guaranteed. Okay, that's not practical in any business. That's another red flag.
If people want to trade online, how should they go about it?
If I was an investor in 2020, the first thing I'd do is diversify my portfolio greatly. Okay, you don't want to be exposed to too much of a single asset, because any unprecedented happening in the world actually affects your portfolio. So I'd first diversify my portfolio, and then the second thing is I'd look for a manager. Naturally, like ourselves at SIB, we've created a fund called Mansa where we do a multi-asset strategy. So I'd look for a manager like this who has a multi-asset strategy. You want to have significant holdings in gold, I'd advise, because as the world becomes more uncertain, as trade tensions soar, you'd want to have a safe asset like gold as well. Gold, for example, last year gained by over 20%, and that's a reflection of flight to safety that is expected to continue this year. I'd put my money in some stocks in the Kenyan stock market. We've seen some undervaluation of some bank stocks. For example, that's where I'd put my money, because after the interest rate cap was removed, the banking sector can only thrive now. We've seen the worst, I think, so this is a good time to start picking up some of those stocks.